Hey everybody, crazy out there, right? What are you to do? You can sit around and, feed into the nervousness and paranoia, or you can be positive and try and take in a bunch of great information. With that said, I decided I wanted to do some interviews this year with some people that have made a great impact on me and my life. So you can expect a series of videos. The first one is with my friend Stefan Reddrick with Alpha Wealth Partners. He's a financial planner, and I think you guys are going to enjoy this. I'm here with one of my trusted referral partners and friends, Stefan Reddrick. Stefan is a financial planner with Alpha Wealth Partners in Orange, right, Stefan?
Yes, we're located now in Newport, not far from the airport, just about a
Okay.
block south of the airport.
Gotcha. Okay. Well, I wanted to do it. My goal this year is to try and interview as many of my partners as I can that are instrumental in my business and that I feel like would be a great resource for all of you. I've known Stefan for almost 5 years now. Super solid guy. I happen to know that he really knows what he's talking about. He managed to get most, if not all, of his clients out of the market right before it crashed recently. And instead of me just regurgitating a lot of stuff that's going on in the news, I just figured some real talk, with a great financial planner would be something that all of you guys can appreciate. So I'm going to let Stefan tell you a little bit about himself, and I'm going to ask him to share kind of his views about what's happening in the stock market and how you guys can turn something negative into positive. So, Stefan, why don't you tell him a little bit about yourself?
Thank you, Barry. So I've been practicing for a little over 20 plus years. Started as a research analyst and kind of made my way through the ranks to become a financial advisor. And I've been advising clients for at least over 20 plus years. Seeing quite a few different markets in those 20 years. I would say that I've managed to kind of some of the worst times. If I had to look back, I think I chose the worst time to become a financial advisor. It was right around 2000. So you can imagine a young guy being a financial advisor in 2000, and all of a sudden 2001, the dot-com bust. So, so I can tell you, it's been, I've earned my stripes in the industry, and I wouldn't trade it for anything in the world.
Not your
Right now,
first
I love
rodeo, huh?
advising clients and trying keeping them safe. One thing that I like to think about is if it were my money, what would I do? So that always is a really interesting guiding principle for what I'm doing when it comes to investing clients. And like you said, when the markets were just hinting that we were in trouble, I made the decision to move clients to cash, which was a pretty bold decision at the time, but it paid off hugely for my clients. We've avoided this big drop. We're now just beginning to start gradually putting ourselves back into the market, but the risk and reward right now is mostly in our favor. So I think my clients are ecstatic about it. I'm happy to be able to bring that kind of value to the relationship. And today I'm excited to share just perspective for people, because not all of us were able to miss this market decline, but that doesn't mean that you should panic. And I was going to bring some interesting perspective for everybody to kind of look at, to think about, and maybe make some really good informed decisions from here.
So, Stefan, I know that you manage a fund called the Tiger Fund. I've heard you speak about it often, and I know that that you in the fund you target specific areas. Can you just spend a minute maybe telling them about the Tiger Fund?
Thank you. It's a concentrated position. We're going to invest in no more than 10 to 15 individual stocks. We're looking at total return at all times. It's 100% tactical. So the fund could be fully invested in securities, or it can be 100% in cash. It really depends on the market. We're totally agnostic. We don't have one industry that we like over another. We're really looking at risk versus return ratio and what's going to drive a good return for investors. And so the fund in the past year was purely concentrated in individual stocks that paid off very well for clients. Right now, we're just about 90% cash. We just started moving in a little bit over the last 3 or 4 trading days, but we're still mostly concentrated in cash. We'll eventually make ourselves probably more whole in the market soon. But for now, the risk and reward is still a little bit off for me right now. So we're still going to stay pat for now. But the clients are very, very risk averse. My clients are just like anyone else. They're risk averse. They don't want to lose a lot of money. In fact, they don't want to lose any money. Nobody really does.
No, come
So
on.
I keep that in mind. I like to try and keep that in mind when we make our decisions going forward.
So, dude, I think anybody who's been watching my videos know I've been talking about, I mean, I hate to state the obvious. It has been freaking nuts. I mean, we've seen more action in the stock market and in the bond market in the course of 2 weeks than I've seen in my whole lifetime. A 3,000 point dip in the Dow in one day followed. I mean, it's at the point now, I was saying this in a video the day before yesterday, the Dow goes up 500 points. And we're like, 500 points used to be like, oh my God, the Dow was up 500 points. Now it's like, the Dow was up 1,200 points earlier. So what? It's up 500 points. I mean, these are crazy times. As we, get farther into, this crisis, I can tell you my feeling about it is, we're probably going to see this get a little bit worse before it gets better. I think that we're going to see, a lot of bad numbers coming in from Washington, not necessarily about deaths, but, there's a lot of people that are going to be unemployed. There's a lot of small businesses that, are in danger. Now, the stimulus package that was just passed, I think was huge. It's going to help a lot of the small businesses. It's going to help a lot of the corporations. It's going to help a lot of people keep their jobs. If you were, if you didn't know everything that you know right now, and you had somebody advising you, just imagine what you would want to hear. Like,
Okay.
should I be pulling my money out? First of all, should I be taking anything out? If I've taken it out, how much should I be putting back in? Why don't you share with the average person out there what your thoughts are about the market?
Okay. That's a good question, Barry. The markets right now are a fairly scary proposition for most folks. But if you look at historically investors that have been wildly successful, they generally are swimming upstream when everyone else is swimming downstream. So if you really give that a moment to settle in, what that really means is that when things are kind of almost at their worst, really sage and true tested investors are actually being aggressive buyers during that time frame. And they generally look at it for a certain period of time. So what I would recommend investors to think about now is when you buy something, don't think about it in the immediate time frame. Don't think it's going to be a 1 or 2 or 3 day, not even a week or maybe even a month. I think you should be thinking about more of a 3 month or more time frame before this thing even works out. But if you can still purchase and withstand volatility, ups and downs over a 3 to 6 month time period, you're going to look back over this and think, wow, that was a really good investment that I made. And you're not even going to remember all of those days that you were really nervous about investing and the market going up and down. That's not going to be material to you. So I'm thinking right now for investors, if you're prepared to wait 3 to 6 months, this is an amazing opportunity. Right now, prices are at lows that we've not seen in decades. I did some research not too long ago, and I pointed out a very interesting fact that it's been a decade since we've had any really notable market declines. So investors for the last 10 years have never seen a 20% market decline. In fact,
True.
and so what you have is you have 10 years of raging successful markets, and now you have this one short period of negative markets, and and then the majority of people think that this is going to be the end all be all market and not to invest. Well, historically, that's just not the case. If you're an investor, facts tell. So I'm going to show you a very interesting chart, Barry. I'm going to share my screen with you,
Yeah, let's see.
and the viewers, to show you a chart that I think would be kind of interesting. If I'm an investor right now and I'm trying to decide on what to do and to keep things in perspective, this would be a chart that I would like for you to think about. Where we oftentimes share this with clients when they're deciding on what to do and how to invest. We want to be very clear that markets are not always going to go up, but we want you to understand what happens when they go down. And so what we've done is we've got this really interesting illustration where we use teddy bears. So we want to try and keep it fun. So you have the little small teddy bear that represents a small decline in the market, 5 to 10%. And you'll notice that the frequency of that is very common. It happens 39 times. And so we've taken this research back to 1945. So this is a very good sample size. And you'll see that the smaller bear goes into the little baby bear. Now that's a 10 or 20% decline. Well, that's happened quite a bit, 13 times. But if you look to the far right column, you'll see that markets rebound. So even with these declines, there's a rebound that's going to be coming. So if we just go ahead and speed up to the large bear at the bottom, that's the grizzly bear. I think we're technically maybe from peak to trough above 30% decline right now. So we're going to fall into that latter category right now. But keep it in perspective, right? That's only happened 5 times before now. So this is very rare. It's not a very common occurrence. But even on the worst case scenario, those corrections don't take longer than 62 months. I don't believe this correction is going to be a 62-month correction. This one feels a little bit more cyclical, meaning that there's a specific thing that's going on that's just triggering it, and it doesn't have this long-term drag that I think that you've seen some of these other corrections have. So if I'm an investor and I'm thinking about investing, I'm thinking if you've got more than 50 months to invest your money, you should be putting as much as you can right now into this market, looking at the historical returns and knowing that everything's going to be fine. But if you cannot withstand that five-year time period, then you know what, maybe not put as much in. But if you are long-term, which most investors are, this is an opportunity you're going to wish that you had taken advantage of. In fact, you're going to go on, this is going to be in the history books.
Yeah,
you're going to be sitting across from your family saying that I was there when this happened and I didn't buy any of those stocks.
that's right. Well, you and I were talking earlier, and most people don't understand this, but whenever there's a loser, there's a winner, right? So for a stock market to go down, when somebody's losing money, there's somebody that's actually making money because the stock market is going down. And we've seen it time and time again. What winds up happening in a situation like this is that, it's terrible for the short term. If you need this money right now, I understand the panic. But my gosh, every time we've seen a market retrace like this, there's been some people that have made bloody fortunes off of getting into the market and taking advantage of it once the market is corrected. When I was young, I used to listen to, I read everything there was about Warren Buffett. I mean, this is back, during if you remember the Wall Street movie, Gordon Gekko, right? It was like, yes. Man, I loved Warren Buffett. I listened to everything he said. The more I would parrot Warren Buffett, the smarter I felt, right? So, and Warren Buffett used to say that, you buy your straw hats in the winter and your overcoats in the summer. And you're never going to buy at the bottom of the market. You're never going to sell at the top of the market. What you aspire to do is buy somewhere around 5% of the bottom of the market, and you want to sell somewhere around 5% of the top of the market. It's that sweet spot in between that we're all looking for. So I know we're all, we want to buy at the bottom of, but listen, I think the only thing we can do is to be open-minded, to listen to smart people like Stefan. I'm going to do this with Stefan. We're going to see how the response was on this. We're going to shoot for next week. We're going to do another one together. and we'll talk about the market as it's unfolding. In the meantime, Stefan, why don't you share with them? In fact, don't share with them because they're not going to listen to what you're saying. I'm going to put your email address down at the bottom of this video.
Okay.
And I'm going to put Stefan's phone number. If you want to call somebody I'm sure Stefan will be able to spend just a few minutes with you and see whether or not he can lay some advice on you. If you're looking for a great financial planner and you need somebody like Stefan, Stefan, are you taking on any new clients right now, or?
Yes, yes,
Okay.
we are. We're taking on new clients.
Wonderful.
Happy to work with folks.
Awesome. Well, listen, thank you so much, Stefan, for joining me. I hope you guys got something out of this. Please, if you have not, subscribe to our YouTube channel where this is going to be. It's also going to be on Facebook, like our page. Also, Stefan, I'm going to put Stefan's Facebook page on there. Although he very rarely goes on Facebook, I want you to like Alpha Wealth Partners Facebook page as well. And if there's anything I can do for you, don't hesitate to reach out to me either. Thanks, guys.
Thank you.